Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Tuesday, the 26th of August 2025. So, as usual, before we kickstart our Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap first what has taken shape yesterday, as well as in early Asia session today before the start of our daily dose at 11 a.m. Singapore time in terms of the relevant news flow, economic data releases, and their impact on the intraday movement on those broad-based cross-asset classes that we cover on a daily basis. So let's start with the performance of the US stock market first. All right. So yesterday, over in the first half of the US session, there is not much of a important key economic data releases. But however, what's interesting over here is that yesterday we start to see all the major US stock indices close in the red after that very strong intraday rally that was seen on last Friday due to that change in tonality from Fed Chair Powell dovish speech over at the Jackson Hole Symposium. So yesterday, the SPX was down by negative 0.4%, followed by the Nasdaq 100 down by negative 0.3%. The Dow Jones and the Russell 2000 underperformed by having a greater magnitude of decline of negative 0.8% and almost 1% on the small cap Russell 2000. And if you look at the heat map of the S&P 500 over here, we start to see a slew of red. Give me a minute. Yeah. Okay. So we see a slew of red in almost all the corner of the so-called S&P 500 universe, but managed to see some of the mega cap technology stocks in the green. So Nvidia rose by 1% ahead of their key earnings release, which is on Wednesday US time, and i.e. in Singapore time will be early Thursday 28th of August, right after the close of the US session. That means after 4 a.m. Singapore time on the 28th of August. And also Alphabet, the parent company of Google, managed to inch higher by 1.2%. And even Tesla rallied almost 2% to be precise, 1.9%. So yes, we start to see, we call it things are in the red for other sectors. But if we were to actually take out from a helicopter view over here by looking at all the listed stock in the US exchange. So this Finviz over here able to give us daily market breadth analysis. So basically this is the total advancing and declining listed shares on the three major US stock exchange. That means the New York Stock Exchange, the Nasdaq, and Amex. Yes, there are more declining shares yesterday at 67%, over 30% that is advancing. But however, other market breadth metrics seems to be much better despite yesterday's across the board so-called sell-off in the four major US stock indices. How do I say that, or why do I say that? But if you look at the amount of shares making new 52-week high versus new 52-week low, is more, right? So total amount of shares listed on the three major stock exchanges, that means this is not the index, so that means all the listed stocks in the exchange of NYSE, Nasdaq, and Amex has 82% of them yesterday hit new 52-week high, and 18% of them only hit new 52-week low. And similar for the percentage of shares that is listed in these three major stock exchanges, NYSE, Nasdaq, Amex, 60% of them are trading above their 50-day moving average, and only 40% of them are trading below the 50-day moving average. Also a positive market breadth indicator on the US stock market. On the longer term moving average, the key 200-day moving average, slightly 53% of them are trading above their 200-day moving average. 47% of them are trading below their 200-day moving average. So this is more like a 50-50 thing. But overall, what I could see on the market breadth indicator based on a broader based helicopter view, yesterday's sell-off in the 4 major US stock indices doesn't seem to be a prelude to the start of a medium-term downtrend phase on the 4 major US stock indices. Yeah, just based on this market breadth approach. And yesterday, we also have towards the end of the coming close to the end of the US session, there was this also negative feedback loop from tariff situation coming back into the picture again, where Trump have this tariff tantrum, or this is sudden outburst. So yesterday he actually mentioned that in his so-called what do I say that press conference, that he has a one-on-one talk meeting with a South Korea president, and in the White House. So during a kind of a Q&A, he told reporters that China have to give us MANEX. So MANEX is talk about the rare earth. So we know that China and US now is in the extended trade truce over here. That means, i.e., China products heading into US will be taxed of 30%. US product heading into China will be 10%. And that remains status quo until this trade truce extension deadline comes closer to in November. So suddenly there was this outburst from Trump stating that early on there was an agreement between US and China saying that US will starts to able to allow more leeway for US technology companies selling lower tier semiconductor chips to China. And with this agreement, China now allow the flow of rare earth to be exported much more freely into US. All right. So all of a sudden, Trump suddenly said yesterday that China must supply MANEX. MANEX is part of the rare earth, or face possible 200% tariff. So this is coming up some kind of a tantrum that Trump's continues to play out, and that potentially, because of this statement, market view it as perhaps the ongoing China trade negotiation may not go down so smooth behind the scenes. That's why Trump suddenly throw up this tantrum, threatening China with a 200% tariffs if China does not abide by the earlier agreement to supply them with MANEX, which is part of that rare earth product. And also part of this Trump tantrum as well as the day was this digital taxes. All right. So let me put it in a bigger screen so that you guys could see. All right, so Trump's vows export curbs tariffs in digital tax reprisal. So what Trump's did over here, he said that those country that has digital taxes on US mega cap firm, that means i.e. Firm that produce those kind of digital assets or media, such as Alphabet, which is search engine, Google, Meta, Facebook, and as well as Amazon, considered as an e-commerce platform. Those countries that taxes these 3 technology US firms due to their so-called digital services taxes, Trump deemed this as so-called unfair, and countries that threaten on this digital service taxes on the 3 mega cap firm in the US, namely Amazon, Alphabet, which is the parent company of Google, and Meta Platform, which owns Facebook. And because of this, Trump saying that he will tend to impose retaliation tariffs against nation digital services tax that hit American technology companies over here. So that also created a bit of negative feedback loop into the stock market in the later half of the US session yesterday. So primarily, Trump didn't actually mention any country that he's targeting specific, but most likely market participants are now looking at EU over here. So we know that EU last week they have agreed with the US and the European Union agreed in a joint statement just last week, that they would together address unjustified trade barriers and would not impose custom duties on electronic transmission. So this was part of this very grey word regarding about digital tax, tax on digital services. All right. So, but however, in a Q&A, we call it a fact sheet after the release of this agreed joint statement between US and EU last week, the EU retaliated separately that it had not committed to alter EU digital regulation, right? Potentially leaving the issue untouched as leverage for future trade talks as the bloc, which is EU, pushes for tariff-free treatment on wine and spirits. That means, i.e., there is no 100% so-called commitment by the EU yet that they will kind of remove this digital we call it as services taxes on American corporation that is operating in the EU bloc over here. All right, so that's actually explain why the German DAX was weak yesterday. All right, so later I'll share with you the technical outlook of that German DAX, what are the key levels to look out for. All right, so that another particular news flow is more pertaining to the FX market. So in today's early Asia session, what you could see over here, let me share with you my screen. Okay, give me a couple of seconds. I think the screen should be good. Yeah, it should be reflected on the screen. All right. So this is a 5-day rolling performance of the dollar against the rest of the major currency. That means $1 against how many euro, $1 against how many sterling pound. So what you could see is that after that dollar sell off on last Friday, it just traded sideways in yesterday US session. But if you were to narrow down to a 1-day rolling performance basis over here. So based on this 1-day rolling performance basis, at the start of the Asia session, right here at 8 a.m. Singapore time, okay, we see a dollar broad-based sell-off throughout the spectrum. That means dollar was weak against all the major currency. Then after that, this lasted for about 50 minutes before the dollar starts to bounce back up again as we are speaking right now. Okay, so the dollar right now has managed to gain back by against the Aussie by positive zero, against the Kiwi by 0.2% and against the Aussie by 0.1%, and almost unchanged versus the rest of the other major currency. And what causes this 50-minute block sell off from 8 a.m. to 8:50 a.m. Singapore time today was this news flow saying that Trump has issued an official letter that he would remove one of the Fed governor, which is Governor Cook, over some kind of mispractices on her mortgage loans over here. So there is still no issue, we call public statement from her stating whether will she kind of fight against Trump dismissal. And Trump claimed that under certain constitutional law, he has the right to fire her. So that actually gave a market a bit of spook, saying that Trump, based on his whim and wishes, could remove any Federal Reserve governor based on XYZ reason that he's deemed as the governor may not have fulfilled his or her duty due to some criminal acts that he or she did in the past. All right, so that create a bit of spook, stating that Trump, the White House administration, could actually alter the independence of the U.S. Federal Reserve. And we know that Trump has been pushing for the U.S. Federal Reserve to be much more dovish, as what the U.S. Federal Reserve does not want to be. Okay, because the U.S. Federal Reserve has a mandate to maintain stable price as well as full employment growth over here due to based on their monetary policy stances. And Trump has been advocating for the Fed to actually cut interest rate, and the Fed has paused its interest rate cut cycle since the start of this year due to uncertainty surrounding on the potential negative impact on the US economy from the array of complicating implementation of the White House tariffs policy. So that actually kind of created a sell-off in the US dollar and also saw a rise in gold prices as well over here. So you look at gold price over here because that's a safe haven bid in terms of we call it this kind of situation that threaten one of the key US institution, which is the Fed. So the gold continues to inch higher in today's Asia session. So earlier on, it was up almost a high of 3,386 before now trading back lower at 3,370 over here. So what I could see go over here is that yes, even though it inched up higher in today's Asia session, but if you look at the bigger picture, it's still stuck inside this complex range, sideways range configuration since the fresh all-time high on 22nd of April. So it's something like a range within a range for gold. All right, unless we have a clear breakout above 3,500, 3,516, then we could have a much more pronounced bullish price action that is in gold price. So I still expect gold price to be this kind of very sideways rangy configuration as it tries to navigate between the complexity of the current situation right now in terms of economic situation and in terms of political situations in the US economy over here. Then for oil prices, yesterday oil prices rallied over here. So those who actually follow our daily dose yesterday, we actually flipped to a bullish bias on oil price yesterday. So oil price yesterday inch up higher by 1.47% and hit exactly at our 20-day moving average. That is our resistance level that we highlighted yesterday at that 65.30 level. And the reason why oil prices rallied yesterday is due to supply disruption from Russia because of this. Yesterday there was this Ukraine attack on Russia oil we call it is installation, oil production installation in Russia. So where was it? Okay, give me a minute. Yeah, so oil rally on Monday was primarily driven by concern on supply disruption as Ukraine struck Russian energy infrastructure. So it seems to us that previously there was this meeting between US and Russia in Alaska between the two leaders, Trump and Putin, to iron out a peace deal between Ukraine and Russia. So given the last few days of developments, it seems to us that this peace deal is not yet solidified yet, and that causes oil price to continues to shape that mean reversion rebound since since the middle part of last week. So later I'll share with you what are the key levels to watch out for again on the WTI West Texas crude oil CFD product. All right, so with that, that comes to the first segment of the daily dose. Let us now move on to the second segment, which is the intraday technical outlook segment. All right, so let me expand my screen. All right, so let me start with the FX market first over here, which is the euro dollar. Okay, so the euro dollar yesterday's did a sell-off over here, but however, that sell-off managed to pause at the 20-day moving average and as well as the pullback line of this former minor descending resistance that was previously drawn from the minor swing high of 18th of August and now turns into a pullback support at around 116.20, which is very close to the 20-day moving average as well. So with that, I would actually still have a bullish bias on the euro dollar for today, but with different pivotal support taking into account of last Friday V-shaped recovery low at 115.90, 115.70 short-term pivotal support zone. Resistance level in first step will be a lower level 116.90, which was previously supported during the European session yesterday. And after this support, they managed to hold and managed to see a sell-off during the US session yesterday. So this will be the first hurdle that the bulls got to actually surpass for today in order for the next intermediate resistance to come in at 170.30, which is very close to the minor swing high on last Friday during the after the speech from after Fed Chair dovish speech at the Jackson Hole Symposium, and also 117.30 is also a crucial resistance level, is because it's actually the descending trend line that kept previous rally since July 2025 minor swing high, right? However, if we start to see a bearish breakdown below 115.70, today's bullish bias will be negated to see a further slide to revisit 115.30, which is the golden ratio of the 61.8% Fibo retracement of that previous up move from 1st of August low to 13th of August high, and as well as the minor swing low area of 1st of August and as well as 5th of August. Okay, these two minor swing low area. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also managed to survive yesterday at our the Titan adjusted pivotal support at 134.45. So levels still remains unchanged at 134.45. So that will be my short-term pivotal support level. But I do have a upside trigger level to actually watch for today in order for the bulls to gain more traction. Will be at this 134.94, 1.3494. Okay, 1.3494 will be an upside trigger level. Above this level, potentially retest last Friday minor swing high at 135, that previously kept any rebounds since the minor swing high of 1st of July, right over here. So once we are able to clear 135.45, potentially we may increase the odds of a fresh new impulsive up move sequence on the sterling dollar. However, if we start to see a price breakdown below 134.45, today's bullish bias will be invalidated to revisit last Friday minor swing low area at 134 figure, 133.70 next. So that's for the sterling dollar. Up next will be the Australia dollar over here. Okay, let me see, where is the Aussie dollar? Okay, 1 second. I think, where is the Aussie dollar chart? Yeah, this is the Aussie dollar chart. Pardon me. Let me push. Let me do some adjustment. Okay, so this will be the Aussie dollar. So yesterday, the Aussie dollar managed to shape that push up, hit our first resistance at 65.05 before trading sideways. Then thereafter, it can't maintain that momentum and trade below the 20-day moving average during the US session, and continues to inch down lower in today's Asia session as well. And one of the reasons why it actually turned soft on the intraday basis was the release of the RBA meetings minutes just a while ago before the start of our daily dose. So this was the meeting 2 weeks ago. This was the minutes from RBA monetary policy meeting around 2 weeks ago. So based on the discussion among the RBA board members or officials, stating that they are actually expect to lower interest rate further over the coming years to meet its policy objective. So that is rather a dovish minutes, with the pace of decline likely to hinge on economic data. Minutes of the August 11 and 12 meeting showed. So it seems to us that RBA officials are still inclining towards a much more dovish monetary policy stance, but they give a little bit of hedging, stating that things may change and they are likely to the next few monetary policy decision are likely to hinge on economic data. That means they are still looking at data by data basis to determine whether to cut, right? But that actually create a bit of softness on the Aussie dollar. And what we could see on the technical perspective, the hourly RSI doesn't look great for the bulls, as it starts to shape a bearish breakdown below a former parallel ascending trend line drawn from the low of 20th of August, indicating the lack of upside momentum based on this latest observation on the hourly RSI. So given this hourly RSI has started to turn bearish, and even though price action hasn't broke below our short-term pivotal support zone that we highlighted yesterday at 64.45, at 64.55, 64.45, I have no conviction right now given the latest development, like I explained on the hourly RSI. to maintain my bullish buyer stance that I have for yesterday. Instead, for today, it may start to trade sideways on the Aussie dollar. So I will flip to a neutrality stance today between 65.05 and 64.45, 64.55, 64.45 on the Aussie dollar. So that's for the current outlook that I have for the Aussie dollar, flipping to a neutrality stance due to the lack of bullish momentum as depicted by the latest observation on the hourly RSI. Lastly will be the dollar yen. So the dollar yen, yes, it managed to see a sell off in today's early Asia session, and right now it's bouncing back up again. So it seems to us that the sell off occurred right exactly at our pivotal resistance yesterday at 145 figure level, which is so the 20-day moving average. So continues to watch this level very closely as the session goes on today on the FX market. So still using 145 as my short-term pivotal resistance level. Maintain that bearish bias on the dollar yen as it continues to trade within this sideways range. So first support level to watch will be the bottom of this sideways range, which is at 14670, 14640. That is in place since the low of 14 of that is in place since the low of 5th of August, and also confluence very closely to the 50-day moving average. Only a bearish breakdown below 640 may see further weakness on the dollar yen to expose the next near-term support level at 14585, which is the minor swing low of 24th of July. However, a bullish breakout above 145 figure level, that is my short-term pivotal resistance that I have for today, will invalidate today's bearish bias scenario to see a squeeze up to retest last Friday high at 14875, which is very close to the 200-day moving average as well. So I think the dollar yen is now trading within a range like kind of scenario, all right, over here. So that's for the dollar yen. All right, next up will be the intraday technical outlook on the major stock indices, starting with the Hong Kong 33 that is representing the Hang Seng index over here. So the Hong Kong 33 continues to remain resilient despite that weakness that was seen on the US stock indices on yesterday over here. So let me watch this. All right. So based the Hong Kong 30, the Hong Kong index based on the CFD is up 0.4% as we are speaking right now. So what we could see over here is that still no change in terms of my pivotal support level. So it's since price action can't break above our first resistance at 25,890, just to prevent any whipsaw, I do not want to tighten my pivotal support level. But for a first intermediate support level, we could actually watch will be today's intraday low that managed to shape a minor V-shaped recovery since the start of today's Asia session, which is the start of the Hong Kong trading session at 9:15 a.m. Singapore time. That is 25,680. Okay, let me put it in writing. All right, 25,680. So unless we have a bullish breakout and the hourly close above 25,890, that I could tighten my pivotal support to 25,680. So for now, I'm still using yesterday pivotal support at 25,490 to maintain my bullish bias on the Hong Kong 33. Above 25,890, potentially seek out the next intermediate resistance level at 26,090 in the first step, which correspond to the upper limit of this major ascending channel from the January 2024 low. However, a bearish breakdown below 25,490 would invalidate today's intraday bullish view to seek out another round of minor corrective decline sequence, exposing the next support level at 25,270, maximum 25,045, which is the 20-day moving average. Next up will be the Japan 225 that is representing the Nikkei 225 over here. So the Nikkei 225 yesterday did a today Asia session, it did a bearish breakdown below 42,520 level, which is my Titan short-term pivotal support previously, and right now it's coming very close to this rising 20-day moving average. So since coming very close to this rising 20-day moving average, and this 20-day moving average has been acting as a price action has started to trade above it after the challenge on it on 1st of August. All right, over here since 4th of August, 1st of August it challenged. Then after that 4th of August it trade above this level, and right now it has now coming close to this 20-day moving average. And as well, if we do the Fibo retracement from 1st of August all the way up to the high of 18th of August, it's now at the 50% Fibo retracement as well. So given that we have this 50% Fibo retracement, I think as a support together with the 20-day moving average, this support zone of 42,000, 41,760 seems to be an important inflection zone as well over here. So given the fact that it's an important inflection zone over here and price action is now coming very close to this level, in terms of reward risk ratio, if I were to have that bearish intraday bias, it doesn't actually offer me a good reward risk ratio over here. So instead, I'll be using this as my pivotal support level or pivotal support zone on the Japan 225, 42,000 / 41,760 in attempt for a potential recovery that could take place or may take place on the Japan 225, given that this potential inflection zone, which I explained earlier. Upside trigger level will be 42,520 that was taken down in today's early Asia session by this hourly, almost an hourly Marubozu candlestick at the start of the Asia session at 8 a.m. Singapore time. So with this will be my upside trigger level. So a breakout above 42,520 will potentially increase the probability of this recovery to revisit 43,060 again in the first step for the Japan 225. But however, if a price breakdown below 41,760, this minor corrective decline scenario will extend further towards the downside to retest the medium-term ascending trend line support that has been in place since the low of 23rd of May 2025, which is confluencing at the next near-term support zone at 41,275, 41,070. Right, so that's for the Japan 225. Next up will be the Germany 30 that representing the German DAX. So the Germany 30 in our Asia session, it actually gapped down because of that negative news flow regarding Trump's trade of countries that are imposing that so-called digital services tax on US technology companies. So potentially he's hinting EU, and we know that Germany is part of is one of the key major economies in EU. So that causes a negative shock in the Asia session as we are speaking right now. But what's interesting over here is that the price action managed to stall again at that 24,155 short-term pivotal support level. So it still continues to be trading inside this minor sideways range that has been in place since 18th of August. So very clearly, the two key levels are still very clear: 24,440, 24,155. So 24,155 will be my pivotal support level to watch, given that it also confluence with another technical element, which is the 20-day moving average. So now price action got to actually clear above 24,440. So that's my first resistance, also the upside trigger level. So without this clearance above this 24,440, it may continue to be trapped in this minor sideways range configuration on the Germany 30 index over here. So above 24,440, the next resistance level will be at 24,560, followed by 24,730, which is a Fibo extension cluster level. So with that, a breakdown below 24,155, that would invalidate the recovery scenario or the bullish bias to see a further slide towards 23,990, which is the minor swing low area of 12th of August. The former minor range resistance of 5th of August and 6th of August now also turns into a pullback support that confluence closely with the 50-day moving average, right? So that's for the Germany 30. Next up will be the US Wall Street 30 that's representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average yesterday did that pullback over here. So this pullback managed to survive very closely to that former all-time high at the 45,100 level. And if you do that Fibo retracement of that rally that has taken shape from Thursday and Friday, using the Thursday low all the way up to the high that was seen on last Friday, that also constitute very closely to the golden ratio of 61.8%. So in between 50% and 61.8% over here. So with that, I'll be watching this 45,100 as my short-term pivotal support on the US Wall Street 30. First resistance level to watch to maintain that bullish biasness for the US Wall Street 30 will be at 45,455. So this level was actually a level that actually when it broke, it triggered off that US session sell-off yesterday over here. So if we start to see a surpass above this 45,455 level, it will increase the odds of the start of a new bullish up leg for the US Wall Street 30 to revisit last Friday high, which is the 0.618 Fibo extension and the 1.618 Fibo extension taken from different minor swing low, which I call it the Fibo extension cluster level, very close to this 45,780 again. However, a price action breakdown below 45,100 that would invalidate today's bullish bias scenario to see a further slide towards 44,900, 44,715, which was last Friday minor swing low, and last Thursday minor swing low that managed to attract that strong intraday bounce and also confluence with the rising 20-day moving average very closely as well. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 yesterday also did that that pullback or that sell off. So that pullback also managed to actually start at the Asia session today as we're speaking at our adjusted pivotal support that we have yesterday at 6410, which is 6,410. So no change, still using 6,410, but I have an upside trigger level for today, which is yesterday's US session close level over here at 6,450 very clearly. This is a kind of a intermediate resistance level. A break above 6,450 potentially will revisit the current all-time high area at 6,490. However, a price action breakdown below 6,410 that would invalidate today's intraday bullish bias to revisit last Wednesday and last Friday important swing low area at 6,370, 6,350 next. Lastly will be the Nasdaq 100. So the Nasdaq 100 also managed to start in today's Asia session at the 23,308 short-term adjusted higher short-term pivotal support level that we have. So still watching this 23,308 short-term pivotal support level, which is rather important given that it managed to start right now. Upside trigger level of the first resistance zone still remains the same at this 25,580, which was yesterday's Asia's almost last Friday high, and also almost the same as yesterday's US session higher. Yesterday US session high, it printed a high of 23,542, right? Give or take is more the same. So this will be the first intermediate resistance zone to watch, 23,580, 23,660 over here, which is this former minor swing low of 15th of August to 19th August now turns into a pullback resistance. So it's like a zone. So a breakout above this 23,580, 23,660 resistance zone will increase the odds of another leg of impulsive up move sequence to retest the current all-time high area at 23,930 next. Only a bearish breakdown below 23,308 will invalidate today's bullish bias to retest the medium-term pivotal support zone, which is very important level because it confluences with three different technical elements: the minor swing low of 20th of August, the upper boundary of the former long-term circular ascending channel from March 2022 low that was previously taken out on the upside since on the 4th of August, now turns into a pullback support, and also the rising 50-day moving average, all of them confluencing at 22,960 / 22,945. Okay, so that's for the Nasdaq 100. Next up will be the commodities market very quickly. So the commodities market, let's touch on gold. So gold managed to do that push up right at our pivotal support that we highlighted yesterday, 3,347, 3,352. So this level remains the same. First support level to watch will be our resistance that has been surpassed in today's Asia session due to that threat of that Fed independence threat by the US White House administration, where Trump actually officially dismissed the Fed Governor Cook due to her mispractices over her previous mortgage loans over here. So first support level 3,373 over here. That price action right now is actually testing an attempt to shape a bullish hammer candlestick. So given the fact that it's still trading within a range configuration, I don't want to tighten my pivotal support level to be so tight. So very clearly, this is a V-shaped minor V-shaped recovery. So this will be my pivotal support for today. 3,346, 3,352 still remains unchanged. Next resistance level to watch will be 3,402, followed by the range resistance of 3,432, 3,432, 3,435. If we go to the daily chart, so this is very clearly the minor medium-term swing high of 6th of May that got rejected on 13th of June and rejected again on 23rd of June. So this will be an important range resistance level to watch, 3,435. So this is how I get 3,435 on the hourly chart over here. Only a bearish breakdown below 3,352 that will invalidate today's bullish bias towards the range resistance as it float down back towards the bottom of the range again, 3,324 in next step, followed by 3,310, which is the minor swing low of 20th of August. So that's for gold XAU/USD, still using that short-term pivotal support zone that we have yesterday, 3,347, 3,352, to maintain that bullish bias towards the upper limit of that complex sideways range configuration. Lastly will be the West Texas crude oil over here. So the West Texas crude oil shape that bounced as expected, all right, hit our resistance level at 65.60, which is the 20-day moving average, and right now there's a bearish reaction of it. RSI has started to exit from the overbought level over here. So with that, we will flip to a neutrality stance for today. So neutral between 65.60 and 64.20. So only a bearish breakdown below 64.20 will increase the conviction for a bearish bias move to revisit 63.30, pardon me, followed by the all important 62.50 ex-post Trump Putin meetup, where the oil price however dipped down and managed to survive since 18th of August, which was the previous Monday. So that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go very quickly, let's look at the economic calendar. What are the key data to look out for today? So for today, during the European session, will be a rather quiet session as well. No key data to take note. So heading towards the US session, we do have a Federal Reserve official speaking at 8:30 p.m. Singapore time. Fed banking will be speaking. Then thereafter, we have another key economic data to take note of. I consider that as a tier 1 data because it's consumer confidence data. This time around compiled by the conference board over here at 10 p.m. Singapore time. So what market is expecting is a slight dip to 96.4 from the previous month of July at 97.2. And thereafter, you have a rather quiet US session over here. So we do have 12 a.m. Singapore time. We have a Bank of England official speaking, official man speaking over here, and that is it. All right. So that sum up the session for today. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.